Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.
Royalty and streaming consolidation continues. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Precious Metals Summit in Beaver Creek, Colorado. Joining me to talk about this is Frederick Bell, CEO of Elemental Altus Royalties. Fred, welcome back to Kitco.
Hi, Paul. A pleasure to be here as always.
Now, we seem to talk a lot, and every time I talk, there's something really new and important to talk about, and this time is no different. The company's just announced a merger with between Elemental Altus Royalties and EMX Royalty in an all-stock deal valued at $456 million with a 9.8% premium. Congratulations there. This deal creates a mid-tier royalty and streaming company, which will be named Elemental Royalty. It will have a pro forma market capitalization of about 1 billion Canadian, 16 producing royalties, 67% of revenue from precious metals, 33% from base metals, and you're going to do a US listing if that's not all. Fred, what's the rationale for the deal?
And maybe just one thing, it's actually one step even better. It's about 1 billion pro forma US dollars in market cap.
Well, the gold price has gone up since I did this 2 days ago. Yeah.
So, look, I think it's a great combination of two very complementary portfolios and two management teams that have actually worked together on transactions that we have syndicated in the past, and with some shareholders between the two companies who are mutual and very aligned in terms of strategy of accretive growth, not just growing for the sake of it, but getting quality assets based on real fundamental geological work. And putting it together to build a portfolio that in the junior space is unmatched now. And I think we have 4 cornerstone royalties that would sit nicely in the portfolio of any of the intermediate, mid-tier or major royalty companies out there.
How did the deal come about? You mentioned you've got some shareholders in common. You've worked on deals together. What's the genesis of the deal?
Look, it's if you go back all the way, Michael Wynn, the exec chair of EMX, was actually on the board of Altus. And we syndicated the Caserones royalty twice. We've actually worked on other transactions, looking at opportunities in the past together as well. So it's been a relationship that's built up over the years and having a number of mutual shareholders. So I think a lot in common and over time as we've got to know each other better. And particularly recently, I think the logic for this combination made more and more sense. And today we're in a position where both companies are sitting on record revenues. We've got really exciting development assets in both of our portfolios. And at a time when commodity prices, gold especially, is really starting to deliver growth. So this combination right now today creates $1 billion plus intermediate company. It gives us, I think, the scale and critical mass and that margin expansion you get in the royalty model that's so fantastic. And we announced with it a US listing that we're going to that I think will really drive liquidity for the combined company.
Now, you're going to be COO, Chief Operating Officer of the new company or the resulting company. What will its focus be going forward?
Look, I think we really want to continue what we've done to date, and that is for both teams. That is looking at good quality acquisitions where we can see the exploration upside. And one of the fantastic benefits in the royalty model is, and the power of it, is that optionality. And that optionality is, to borrow a phrase from Dave Cole, it's multiplicative across the exploration, across the commodity price, across technological improvements. And so I think for us, trying to tag royalties onto those sorts of opportunities is what's really key. And the EMX team have what would be regarded as the strongest technical team in the junior royalty space. And I think we're really excited to work with them on that. And I think there's a lot of opportunities that we can get them to cast their eye over that we've been looking at. And the combination of both will make it stronger. So we're going to continue on the royalty acquisition front. And we're going to look for where we see sensible value and building out the company. We're also going to continue on the generation front, where we can be putting options on projects at an early stage and getting exposure that we otherwise might not be able to get. And as we stand today, we'll have a portfolio of about 16 cash flowing royalties across 200 on the wider portfolio. So a lot of optionality built in there.
Okay, multiplicative. Is that why Dave's going to be CEO and you're COO?
Exactly right.
Okay, excellent. Now, you've also been very busy in the deal space recently. You just did a deal on Laverton in Australia, a $52 million deal. Tell us about that one.
It actually, funnily enough, it went under the radar, but it is the largest single royalty acquisition Elemental Altus has made to date. And it is building on an existing royalty we hold on that project, Laverton. And we had a royalty effectively on half of the project. And this royalty we bought is an additional 2%, but it covers the whole part of the project we're looking at. So it makes it now for us a cornerstone royalty asset going forwards. And it is a a tier one jurisdiction. It's a very well-known management team and company in Australia, Genesis. I think they're about a $4 billion US market cap. A very successful track record building Saracen and merging into Northern Star. So it's a really high quality asset, high quality exploration potential in a tier one jurisdiction and a very good management team. So I think being able to simultaneously add to the portfolio organically while we're doing a $450 million combination, as you said, I think that's exactly what we will be able to do going forwards as a combined team.
You don't like doing things easy, do you, Fred? I mean, looking back to the time we've known each other, you've fought off hostile acquisitions, you've done on a couple of occasions several things at the same time and juggling all of those.
Yeah, no one. People joke that the royalty space, you come in at 10, you leave at 4. You don't have to operate any assets. I think they're probably people who haven't worked in the royalty space themselves, because it's we've juggled, as you said, unsolicited offers, M&A. We've done cross-border merger with Altus. We've had some cornerstone shareholders, and Tether most recently coming in, which has been a catalyst to really, I think, unshackle the company and give us a much increased scope of growth and opportunity. And then part of that coming in was the combination with EMX.
So that's more coming in again at 10 o'clock at night and leaving at 4 o'clock in the morning.
Yeah.
Okay. What will this deal do for the cost structure of the company and the cost of capital? It seems from the news release when I read it, that it doesn't seem to be, you're not really talking about synergies or cost savings at the C-suite level or things of that nature. So where will the value driver be there?
Look, I think there's some initial, very straightforward synergies in the multi-million-dollar range from putting the two companies together. And I think that's on the corporate front, on the many duplicative things that we do that we're not going to have to do. So the first stage, that's the most important synergy. And then I think that across the team, actually what we want to do is we want to do more and grow faster. And that value creation is really what we're focused on. So I think we were sitting here at this conference 2 days ago, and I was looking around the table, and we were simultaneously progressing our US listing, progressing documentation for the merger. We were working on a royalty opportunity, and we were having a meeting with investors. And that's more than I think either company would have been able to do individually. And it was the benefit of having the combined team. So I think for us, really what we're focused on is continuing to grow this company in a really sensible manner. And one thing that people can forget with this entity is we're coming out with a roughly $50 million cash balance on closing, 70 to 80 million revenue base. This is all US dollars on a go-forward basis. And a credit facility that, if we upsize it, could probably support $200 million. So in terms of available capital to deploy, as a pro forma entity from mid-November, we'll probably be in a position to deploy $250 million of non-dilutive capital going forwards. So that puts us in an incredibly strong position to continue to grow the company.
Okay, this perhaps is a good time then in talking about growth, of bringing in what you just mentioned about stablecoin company Tether Investments, which has supported the deal. They're going to buy $75 million of your shares for about $100 million US dollars. What is that money for?
Look, part of that is the two acquisitions we just announced, Laverton and another Dubai, that together are about $68 million. And there is also, on EMX's side, a credit facility they have with Franco-Nevada that they will pay down as part of this transaction. And then we will have one probably upsized credit facility going forwards for the combined company. And then we will emerge out of this with more cash in hand, about probably 50 million order of magnitude US, on completion of this deal. So it's partly for those acquisitions, it's partly for the credit facility on the EMX side that we need to close as part of this, and then some of the transaction costs as well. But it puts the company in a position where, if I rewind a year and a half, I think we were in a position where, as Elemental, we had net debt of probably $20 million. And we're now in a position where our revenue is going to be sort of 4 times what it was. We're going to have $50 million on the balance sheet. This company is in a completely different position to where EMX or Elemental Altus were at the beginning of the year.
I mean, it has been quite impressive growth. Let's talk a little bit more about Tether and its intentions for you. I think it was one of the most interesting transactions of the year when that was announced, because Tether, a stablecoin company, making its first foray, if you like, into the mining and precious metals space. What is the idea there? What is the idea of what you're going to do together?
Look, I think it's public knowledge that Tether have acquired approximately $10 billion of physical gold, and they're continuing to add to their gold exposure. And I think that the reason the royalty model appeals, it's probably the second safest way to gain gold exposure after the physical. But one of the wonderful things is that if you are buying physical gold today at $3,600, $3,700, I can't keep track every day. If you're buying it at that, if you look at long-term consensus gold prices in the mining industry, we might be using $2,500 gold. Maybe it's moved up to $2,600, but you are building in huge optionality there in terms of the gold price. And if you're comfortable getting exposure to gold at 3,600, you should definitely be comfortable getting exposure uncapped to future gold production at $2,600 gold. And so I think it's a really, for Tether's perspective, it's a great way to continue to increase their exposure in the gold space. And for us, it gives us a very strong cornerstone shareholder who, as part of this transaction you mentioned, is putting another $100 million into the company. And I think would love to see us to continue to grow it in a very smart, sensible manner, and will support us doing that.
Okay. With the gold price at $3,600 per ounce, silver over $40 per ounce, copper at $4.50 a pound, metals prices are rising high. What does that do for deal flow? Does that make it more difficult? Companies can raise more money more easily, perhaps have greater cash flow streams themselves. Does that make it more difficult to get deals, to source deals?
So it's a very good question. I think I'd split it into two parts. And on the one hand is we benefit as a company because we have a very high proportion of producing assets relative to anyone else and cash flow. And so every day those gold prices, copper prices are higher, we benefit from it greater than we expected. So that's the first part. The second part is on the opportunity side. And I think that is fair to say that in more buoyant markets, there are less opportunities with corporates to do transactions. Having said that, I think we've probably seen $2.5 billion of transactions, royalty and streaming, recently done on that side. So by no means is it not there. And also, I would just point to last week doing two transactions simultaneously 2 days before we announced this merger. And the interesting thing there was one of those opportunities was one we'd probably been engaging on for maybe 3 years with the private royalty owners and known them for. And I think that was something that sometimes these markets can actually open up opportunities, and you see the consolidation and you see the M&A and the change of ownerships. Actually, it not only opens the opportunities, but in some of these transactions, you're seeing new royalties being created as part of those deals.
Well, I want to talk about one of those right now because there was a big transaction announced this morning, and that included a $400 million stream on the Hemlo mine in Ontario in Canada. And I think it would be fair to say that having that that stream component as part of the financing package enabled that deal to happen. Perhaps wouldn't if that wasn't there. Question here, how long before you are big enough to compete for those kind of deals?
Look, it's a good question. We've come a long way from, on the Elemental side, our first transaction, I think, was $400,000. And as we have scaled up the company, we've gone from $500,000 to $1 million to $4.5 million to $12.5 million. And our most recent single transaction was $52 million and combined with 68. So clearly, we, and I know it's been the same case for EMX, have been able to scale up the size of the transactions. So I think where we're sitting today, we could comfortably be looking at $200 million transactions where they make sense. And that's where you can start to be actually impactful in assisting companies in acquiring assets and playing a role there. I think if you're looking at the $10 to $20 million space, it's harder to have a meaningful role in that. So it does open up new opportunities for us on the business development front, being able to write those bigger checks onto bigger assets. And I think it's a well-known Rick rule saying that when you look at bigger assets, you tend to have more upside with them. And you have the same risks across it. It's just the upside's greater. And I think for us, that's something that this combination really achieves, is it gives us some cornerstone assets, Timok, Caserones, Karlawinda, and Laverton, that would sit in the portfolios of any of the mid-tier or major royalty companies. And that is a really important trait for this company going forwards, because for decades to come, we will have some cornerstone, high-quality, uncapped royalties, giving us optionality to commodity prices.
I think what you mentioned there about competing for $200 million deals is perhaps quite an important aspect, because I would say when you look at the royalty streaming space in general, $200 million is way out of the reach of, let's say, 75% of the companies in the space. And it may not be interesting enough for the really big guys. So you've got perhaps very little competition or much reduced competition for deals of that size.
Yeah, it's a really interesting point, because in the last 3 months, we've seen more M&A in the royalty space than we've seen in the last probably 3 years. So we saw the Triple Flag Origin transaction. We saw the Royal Gold Sandstorm transaction. And now we've seen the combination between Elemental, Altus and EMX. And one of the interesting traits there is that Sandstorm were the smallest of the three of the mid-tiers. And so that gap between the junior royalty companies, call it $500 million size, up to the $5 billion mid-tiers, that gap is now open. And so I think with this transaction, it creates a $1 billion company moving into that gap. And as you say, that in itself creates new opportunities in terms of the transactions that are really meaningful for us and perhaps not so meaningful for some of the larger royalty companies.
Do you see more of that consolidation happening in the royalty and streaming space?
Yeah, look, I think it's always driven by, and it should be by value, and does it make sense? And the way we try to look at it is, where are we going to get more value for our shareholders? Is it an individual acquisition? Is it a private portfolio of royalties, or is it a portfolio held in a public company? And the method of holding it shouldn't make a difference. Fundamentally, it is, where are we seeing the most value? And that changes over time. It changes the market conditions. It changes with the deal flow that we have available. So we're always looking at the different options there. And I think that we're in a really strong position today to take advantage across all of those. And we are, I think, really enjoying the last week. And it's only not quite been a week yet since we announced it. But we've actually enjoyed being able to look at both of our deal flow and opportunities that we're working at together.
In addition to the royalties you've brought into the company over the last year or so, I think it'd be fair to say that Elemental has transformed considerably. You've touched on that in a few of your comments. More recently, you've seen key shareholders, La Mancha and Alpha, obtain a liquidity event via Tether. You're no longer a Discovery Group company. How do you see that evolution continuing? And those people I've just mentioned, they brought quite a bit of mining knowledge and experience and perhaps access to deal generation as well. So how do you replace some of that?
It's a really good point. And over the course of the company, something we have always tried to do is associate with good quality people. And from experience, I think if you associate with good quality people, they tend to introduce you to other good quality people, and it's a virtuous circle. So we've had a number of the mining industry's private equity funds as shareholders or partners at times, either in the company or even syndicating royalty acquisitions with. We've had some major investors, you mentioned, as shareholders. And I think that one of the great things is a lot of those relationships we can continue to touch on when we look at opportunities, and we have in the past and will continue to. So nice to be able to go back to some of our shareholders and talk to them about deals and opportunities we're seeing, but also have the benefit of new shareholders with their strengths. And I think that's why we always try and keep a good relationship with everyone, because it's a very small industry, as you know. The royalty space has just got significantly smaller in the past 3 months. And I think that we want to try to continue to work collaboratively and in a really positive manner with both existing new shareholders and our former shareholders.
Now, every time, as I mentioned at the start of our conversation today, every time I meet you, there's something new to talk about. So I almost then ask this next question, Fred, given the success and your activities this year, but what are some of the key catalysts coming for the company over the next 12 months that our viewers should be watching out for?
Yeah, and look, in recent times, we've been thinking in days and weeks rather than months, but I think the really exciting thing, and this is especially the case from where I come from, but the US listing, which we're targeting for October, I think that's going to be a really exciting catalyst for the company, because it is something that we have talked about internally for a while, and this is clearly the right time to do it. And we're hoping to get that completed in October, and the combination with EMX closed in November. So that, as a $1 billion order of magnitude company, it should actually open the door to a lot of new investors in the space and people who haven't been able to invest in the company historically. So I think that's something that we're really excited about in the very short term. Closing the combination in November is step 2, and then probably step 3 is in the background in parallel, every day, every week, continuing to look at new royalty opportunities. And we're not going to stand still during this time. We're absolutely going to be looking at new acquisitions we can bring into the pipeline. And if Dave was here, he would probably talk to the discoveries and exploration and optionality across our portfolio that's going on in the background. And I think a rough internal estimate was that our partners and counterparties on our portfolio are spending about $100 million in exploration and development across our portfolio. And to have that kind of investment going in, it's fantastic for us as a company. And we're going to continue now with double the size of the portfolio. We're going to continue to see that, and we're going to be able to talk to it. And last night when we were having dinner, actually one of our operators that recently acquired in Australia just put out an announcement with very good drill results under their existing their pit. So I think seeing that daily, weekly, and as the portfolio gets bigger, we benefit from even more optionality across that.
Well, congratulations on a great deal and a successful year. Frederick Bell, thank you very much for joining us today.
Thanks, Paul.
And we have a lot more to come from the 2025 Precious Metals Summit here in Beaver Creek, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of the Precious Metals Summit is brought to you by New Core Gold.